Launch team wishes you good luck and Godspeed.
Space Monkeys, blasting off with Joshua Klayman. She's the U.S. head of fintech and head of blockchain and digital assets for Linklaters, a multinational law firm, and Angie Dalton. She's the founder and CEO of Signum Growth Capital. She's also lead advisor to ARK Invest. Ladies, thank you very much for being here. So happy to have you here on Space Monkeys.
Thank you for having us.
So we just got some massive news with Kraken and the SEC. I'm sure everybody who's watching this just heard about it a few days ago. But for those who haven't, maybe you could give us a quick rundown on what just happened.
So when we say just happened, we mean just within minutes.
Yeah.
So, please take with a grain of salt everything that's said because we don't have the facts in front of us.
Right.
But evidently, Kraken was reported to have settled with the SEC to be paying a $30 million fine with respect to its staking as a service business that had been made available to U.S. retail purchasers, retail investors, based on the idea that this staking as a service was the unregistered sale of securities, of an investment contract, and hence securities.
We had Brian Armstrong on Twitter maybe rallying the troops about something to do with the SEC, tearing down proof of stake and staking in general. What's going on there? How does that tie with what Brian was saying?
So it's a great question. There also was that tweet, right, just from the other day, that sort of talked about the SEC wanting to get rid of all staking.
Right.
Now, I can't speak for the SEC. I can't speak for Brian Armstrong. I can't speak for anyone except for myself. And by the way, nothing that we say is legal advice, investment advice, anything other than our personal views. But yeah, so this idea of staking being outlawed, to me, this is just potentially to cause concern in the industry, right? Because staking itself, in my view, is different from staking and staking. So we have staking, the first staking, which is in a proof of stake system, basically staking your token to provide validation and security for a network, right, as part of a proof of stake network. Then you have staking as a service, where some entity or group does the staking for other token holders, right? And so that's a business, right, where potentially, and I think this is what the SEC's argument was with Kraken, where these token holders are reliant upon the efforts of others, as we know from the Howey test, part of the factors, the staking as a service provider, to get returns based on the efforts of the staking provider. So that's different potentially, or one might be able to distinguish it from staking your own digital asset in connection with the validation of a network.
Right.
And then the third staking really is, I think, something akin to what Gary Gensler's been talking about when he says sometimes staking looks like lending. If you actually don't have a network for the staking to be part of, if you don't have a proof of stake network, then having your token staked somewhere and receiving a return on it, that looks a lot like interest, right? It looks a lot like lending.
Right.
And so what we could see just in the past couple of minutes from the SEC's release is that Gary Gensler was reminding folks, that if you have a staking as a service business, or if you are a provider of lending in various instances in digital assets, of the need to come in and register if you're going to be dealing with U.S. retail folks.
I also think it's important to look at the comment that was made yesterday by Valerie Stepanek. She was at a conference. We shouldn't think about crypto as its own asset class, is I think exactly what she said. And I think that's really important because she followed that up by saying we should be looking at function and activity. And I think what Josh is referring to is staking when it provides function for the network, which is security. That is an activity that does not look like traditional lending.
Right.
That does not look like an investment contract. If there are activities that look like traditional lending or look like investment contracts, then they probably are. I mean, the behavior we're seeing isn't that different than a lot of traditional investment contracts, which is why I think a lot of the rules that the SEC has laid out for the last, decades, let's say, still apply.
And we shouldn't be trying to say, in my view, that staking is being outlawed or the SEC wants to get rid of staking.
Right.
We should be doing the opposite and trying to differentiate between the activities.
I find in the retail crypto community, there's this real story of crypto is this unregulated, brand new asset class idea. There's no rules to it, and it's under attack. But really, it sounds like what you guys are saying is that crypto actually fits into existing infrastructure and regulation already.
It is. I think when we sat down in 2019 for the first time with the SEC, we went in with the mindset that they ask us to come in and talk to them.
Yeah.
And so, having had a traditional background, it's kind of natural to do that. Like when you're going through a go public process, for example, for a company. It's a process. There is a lot of work that goes into taking a company public because of investor protection. We have the best investor protection laws in the world here. And so having been in the traditional world and kind of seeing how that works, I thought everyone was going to rush in and do the same thing.
Right.
Okay, time to go talk to the SEC and get clarity and figure this out. And it's iterative. Their job is enforcement. That is what the SEC does, is enforce the laws that are created by Congress.
Right.
So a couple of narratives in crypto have always kind of sounded strange to me, which is there's no clarity because there is clarity in securities laws, and this has evolved, and these are changing. These are new applications, I guess, of old laws, but they work. It just takes longer and it's harder to actually abide by them when you're offering a decentralized network. So you can apply the same laws. And yes, there are nuances that you have to go through, and you have to kind of parse through and figure out, okay, what is the analogy to this from the old world potentially, and what is new here. But we found the old rules worked.
Listen, for capital raising, if you're fundraising, guess what? Securities laws should not be a surprise.
Okay.
Right? If you're doing things that look like traditional financial activities,
yes,
securities laws and other laws that govern financial transactions, it should not be a surprise that they will apply in the US. And I think that's actually what Val was saying, right? We look at the activity, like Angie said as well, and we look at the function. Now, for other sorts of things, there may be uses of digital assets and blockchain technology, which, there are many, many use cases. But things involving activities that are not traditional financial activities, maybe the securities laws don't necessarily fit, and maybe they don't need to fit because maybe you're not dealing with investors and maybe you don't need investor protection. Right? And so I think that's a big thing. I think often in our industry, we talk about, or folks talk about in general, how the existing laws, the digital assets are different, the blockchain is different, that this technology is different and capable of so much more. I think if we want to make headway with regulators and legislators and others, we need to see more examples of those other use cases. Right? Because we keep saying that there's so much promise and so much activity. Well, bring it, right? If you just keep creating products that are investment vehicles and designed to raise capital, it's not very convincing, I would imagine, to regulators that the securities laws and other laws should not apply.
Versus, in Polkadot, what we were both excited about from the beginning is this idea that the concept is not an alternative to, it's not an alternative form of currency. It's not an alternative system for trading currency. It really is just an alternative infrastructure upon which more truth, less trust can be built.
All right. And I want to get into your work with the SEC and redefining or morphing Polkadot into a software. But first, I just want to know a little bit more about kind of the backstories, like how you got here. Were you both, young, passionate, legal third graders, like ready to, grow up and take over the world? Or how did you end up in this legal realm?
So I was young once, but I was not a young third grader wanting to be a lawyer, not at all. For the longest time, I wanted to be an actress. And I, as some may know, I started my family very young. When I was a teenager, actually, in college, I had my first child. And so as soon as I did, or as soon as I determined that that was what would be happening, I realized I couldn't be a starving artist because I would have someone starving along with me. So that kind of shaped my view, but I still didn't think about law. Law
Okay.
wasn't something that I really saw myself necessarily doing. I was working, doing management consulting and other sorts of things leading up to that during college. But I would spend a lot of time in the bookstore in my spare time, and I would read a lot about game theory and complexity theory and things like that. And so I became very interested in the Santa Fe Institute and what was going on there. And I wanted, in my wildest dreams, to run away and join there. Nevertheless, I did not because, again, I couldn't. And I needed to focus on other things. So I did management consulting for a few years after college as well. And then I decided I really needed to make more money. And so it was not a passion for the law that led me to the law.
Okay.
It was literally looking at the different tests that were available to take, whether it was an MCAT or an LSAT or whatever the case may be, the GMAT. And I realized that, look, the LSAT, it was a lot like the Dell logic game puzzles that I enjoyed doing in my spare time. And I didn't need to actually learn any new material for it. So that is how I decided, because I was doing kind of a calculation in my mind, like, okay, if I want to take the MCAT, if I want to go to med school, like I'm going to have to do like a post-bac pre-med program, all these sorts of things.
Right, yeah.
And so I was just like, okay, I'll take the LSAT. And that's how my legal career was born.
Amazing. What does the LSAT get you? You get your LSAT, and then what? What can you do?
Well, I took it and I applied to exactly one law school where I knew I could both get a scholarship and also if I needed to. I ended up going full-time day, but I knew that I could go at night if I needed to.
Yeah.
So that's what I did. And yeah, I went to law school, and then after I did, I went into finance. I became a finance lawyer and doing leverage finance and securities. And it was only after doing that for like a decade that I got into digital assets. And so I got into digital assets in around 2015, being interested in it. But one of the most exciting things for me with digital assets and blockchain, actually it was smart contracts that I first was hearing about because they were going to reduce legal spend by getting rid of lawyers writing loan agreements, which I was.
Okay.
So yeah, but one of my most exciting realizations was that many of the projects, the whole basis of digital assets and blockchain relies on game theory.
Right.
And so it was like the marriage of game theory that I thought I'd abandoned in the Santa Fe Institute.
Yeah.
And another highlight I will say is when I actually got to meet someone just by happenstance at an event that Cornell Tech was having. And I was introduced to someone, Dawn Song, who's on the board of the Santa Fe Institute. And so that was super exciting because she was talking about blockchain and it was for a blockchain conference, but it was like, oh my gosh, almost like I had a sign, I've been going in the right direction, even though it was a twisted path.
That's amazing. Okay, Angie, and then you have Signum Growth Capital. I think on one side you're advising for ARC. The other side you're investing in media and games. How did you get here?
Basically, the intersection of culture meets crypto. So culture, gaming is really my area of expertise, but that extends into music. Music and fashion are cousins of gaming. So all things entertainment. It's funny because when I was a kid, I told everyone I would be a lawyer.
No, okay.
But then I didn't.
Okay.
And then when I grew up, I just was so fascinated with languages.
Yeah.
So I studied French and Spanish and business undergrad. And then I went to University of Chicago for grad school. I love figuring out how things kind of come together. And so I've always been attracted to emerging technologies. And then gaming has always fascinated me, even though I wasn't a traditional gamer, like a first-person shooter, Call of Duty player, or anything like that. I have 3 kids who range from 11 to 21 at this point, and my son was really into games when he was a kid. I got into the whole concept of esports very, very early.
Okay.
I started really having fun watching him play Minecraft and League of Legends, and I was always in these media groups where gaming was dismissed. And in traditional finance, I couldn't figure out why.
Okay.
Like, people weren't excited about providing banking services or research coverage or any of that.
Right.
And I thought, wow, it's so weird because all of the attention, and media is an attention business, right?
Right.
You know that, you run a media business.
Yeah.
All the attention had shifted to games.
Of course.
$100+ billion was being spent on advertising, TV advertising, linear advertising. And yet more and more people were not watching TV.
Right.
And so it was just, I just was drawn to it. And I just kept going. And I was the first kind of esports traditional analyst.
Right.
I got really excited when the ERC 721 came out because in video games, people have been buying, selling, trading digital assets for decades. This behavior is not new. And I'm a big believer, at Signum, we're big believers in this concept of merging onto the highway of behavior that is already happening. Gamers are already doing this. And so, we've always believed that gaming will be the Trojan horse into, all of these new digital economies online. And the ERC 721 standard and meeting William Enterkin, who was the lead author, was also mind-blowing because I thought, wow, we could build a business around this idea of social capital and identity in the same way people were spending $5 billion on skins in Fortnite and weapons in Fortnite because they want to show who they are. In the same way my parents have, the china on the table and the art on the walls and the car that drives out of the driveway. Mm-hmm. In games, that kind of social capital and identity came from skins and weapons and all the things that you show in the digital spaces, but you don't have property rights.
Right.
So the idea that really got me excited about building Signum was this idea that new economies are going to be bubbling up in these new digital spaces where we have property rights. And so the opportunities are endless, and nobody had really gone down that path.
As a new concept, obviously Facebook changed its name to Meta and many other things. But Angie, on her website, since what year?
2018.
Yeah, she's had Into the Metaverse on her website since then.
I'm going to take it down now because I feel like Zuckerberg ruined it.
The losers came in. Totally, it's not cool
anymore.
The
website designer yesterday, Josh, but it was awesome back then in 2018.
But I think the reason I pointed it out is like a lot of times people will be people are like late to the party and they want to say they were there all along. Like like Angie was sending out invitations to the party.
Yeah, no, I was just going to say, it sounds like you're on the edge and that's where you like to be.
Yep.
And I'm a big fan of Kathy Wood. I watch her monthly episodes and I know that they're right on the edge as well. How do you see Polkadot fitting into these future economies?
So back in 2018, a big media company in LA asked me to come back to them with a conclusion on blockchain meets video games.
Yeah. Okay.
And who they should potentially acquire, meaning, M&A acquire, and who, which protocols they should look at to build video games on top of. And my presentation was short and sweet. I said, here's the conclusion. None of these protocols are going to work for mass market applications. Ethereum and Bitcoin was really all we had at that time to look at. And, given the transaction fees, that kind of gas fee would never work in a mass market application because you just don't, and we all know that now.
Yeah.
And of course there are layer 2 applications on top of Ethereum, and I'm sure that anyone who sees it is going to be like, oh no, it's all fixed. But for 4 billion gamers, it's not fixed.
No. Right.
It's a lot of people. Mm-hmm. There are a lot of people who are in these mass market applications, and by the way, they don't want to pay for every transaction because that doesn't make any sense. So the main conclusion was it doesn't make any sense in technology to have a network that gets more expensive the more people who use it.
Right.
It should be the opposite.
Yeah.
So that was my presentation, and I left and I said, let's stay in touch. Mm-hmm. And then I met Jutta Steiner. She educated me on Polkadot. I started doing more work on it, really dug in.
Cool.
I was very inspired by the founding story of Polkadot and the fact that, I've seen some pattern recognition around founders who go down a path and find out all of the things that could be done differently and then say, you know what, let's just put that aside and start fresh.
Yep.
That was attractive to me. Mm-hmm. And yeah, I mean, I thought that the ethos of fairness was important because that is the point of Web3 to me. This was the right path.
Okay. And Josh,
At the very, very beginning, back, I believe probably in 2016, I was introduced via email to Yoda and Gav and some others by a different founder whom I'd represented at the time on a different project. And it just was all just very cursory level. Then Angie and I met, and it was the first time I met Yoda in person, was in an event for leaders in digital assets who happen to be women, called Collective Future, right?
Okay,
And
yeah.
so there was a large gathering actually, I guess it wasn't that large. How many people were there? Maybe 20? Yeah. And we spent a weekend retreat
in Williamsburg.
Yes. But then, fast forward, we were all working in our respective fields. And then one day I was contacted by Angie. It wasn't like we weren't in touch, but Angie contacted me about Web3 and what was going on. And this was before we ended up speaking, with the SEC as part of the process, and brought me in. And I couldn't be more excited.
Okay, now at this point, I just want to let our audience know that we had both Angie and Josh on a Twitter space on Sama Nights a few weeks ago. That's going to be linked or threaded below, where we dive deep into this conversation you guys had with the SEC. So the SEC made an open invitation for blockchain projects to come in and talk to them, which is different than the SEC knocking on a blockchain project's door and wanting to talk to them. What was that first call like, or that first knock on the door like?
Well, I think, Angie, you started, the initial outreach was by you.
It's actually not that exciting. It was just an overview of the process, which was a web form that we had to fill out to come in.
Okay.
And I think it was maybe 2 weeks later, we went to DC. And in those 2 weeks, we called Josh and we all went to DC together.
And what do you think the SEC was looking for when they made this invitation?
So there are a lot of different opinions about what the SEC was trying to do. Some may say, they may be very cynical and say, they were just trying to find, a backdoor for enforcement, right?
Yeah.
I think otherwise. I really think that the people who are part of FinHub, at least in my experience, have been uniformly, in my experience, thoughtful.
Sure.
Interested, wanting to learn more about the digital asset space. I really think that part of it was to truly learn more about the technology. And, when we do say, look, there are differences between digital assets and blockchain technology and other sorts of technologies that are different, right? I think they wanted to understand how, and also I think they wanted to give the benefit of the doubt in many cases to projects, right? You may have had many folks very critical of projects that had raised money through ICOs. And I think it was an opportunity to say, this is what our technology does. I think also part of the invitation was to say, before you go do something, come in and talk to us.
Right.
Let us see if we can give you a steer. We can talk through, how you might satisfy at least the spirit of certain requirements or, where there may be differences. Kind of almost like a sandbox, right? Some sort of interaction like that.
And it's not their job to give advice.
Okay.
I think that's important. We depended on our legal counsel, Josh, to, help us steer the conversation and to come up with an opinion as well.
Also, sometimes it involves saying why we think that a particular plan of action is okay or should be okay under the law, right? And so not saying is this okay with you?
Yeah.
Right? But saying this is why we think it's okay. And then getting feedback. And often the feedback took the form of questions. But just to be clear, it wasn't questions that we were ever obligated to answer, right? It was always an elective process where questions were asked. And if we wanted to proceed further, we did.
Right.
I also think it's important to say that we don't think this is the only way forward for projects. This is one way. And for us, we felt, the Web3 Foundation felt, and bringing us in, we all felt that going in 6 months before we started to launch the network was important because we might need that much time to figure out kind of the rules of the road and how to do this within the legal framework that already exists. It was just a much easier merge onto the highway because there are existing laws. And we thought if we could operate within those laws, we're going to be more successful, because the purpose was not to get into a regulatory process. It was to deliver the network.
Right.
Yeah.
Polkadot network. Yeah.
If you're going to go in, obviously, speak with your legal counsel. Your mileage may vary. But doing so at the architectural phase, I would say, at the planning phase,
Sure.
people might not want to do that because they may be told no. But if you're told no, maybe you can find a workaround. Right? And I do think people often look for no action relief as the only path forward. I do think that in my experience, and I think in our experience, you can get no red flags guidance on a variety of matters. So I will say this. Not all of my clients have I taken to see FinHub.
Okay.
But I have taken clients to see FinHub, and it hasn't always been for the same purpose.
Mm-hmm.
It's not something where we've heard that this mantra or this belief that every project, every team that goes to talk to the SEC, that you come away harmed, thwarted, stopped. Right?
Yeah.
And in my experience, that hasn't been the case. Again, you should be judicious. Maybe you may have done something, or your team may have done something where you're not sure whether it was done properly. Maybe that's not the time necessarily. You should consult your counsel. But I, by and large, feel that we're really lucky to have Valerie Stepanek and the FinHub team and CorpFin alongside of them who have this, who are willing to give feedback.
Yeah.
Yeah, we found that the views of the SEC around decentralization were very much in line with the founders and the developers in Polkadot. So that just worked out.
Yeah.
I think if you ask any developer anywhere on any project, how do you feel about regulators? They'd be like, oh, regulators, whatever.
So
but it just
yeah.
so happened that the vision for decentralization was similar.
That's really surprising.
Mm-hmm.
Yeah.
And there are a lot of aspects to crypto that are not decentralized, as we all know.
Absolutely.
I do think it's very hard to really walk the talk of true decentralization.
Absolutely.
Yeah, I mentioned the go public process is difficult for publicly traded companies in the U.S. because of investor protection, but they don't have to decentralize.
Right.
That takes time because of human behavior.
Sure.
To give up control of your vision, what you built, to give up control when you want to make sure that everybody else in the ecosystem all over the world has the same vision that you have.
Right.
To make sure that everybody knows kind of their roles, basically, is really, really hard to do. And then to communicate in a way that protects investors, to not have material non-public information. It's hard.
You mentioned no action. I want to get the soundbite. A big criticism of this morphing, which we'll get into in a second, is people say, well, the SEC hasn't issued a no action letter. And I just wanted to ask you guys once and for all, what are people misunderstanding about no action letters? And what's your understanding of no action letters? And how relevant are they?
I think this, and I can understand where people are coming from.
Sure.
Like, it's very, it feels good, and it can be helpful to see something in writing from the SEC, right? Mm-hmm. What I would say, apart from the overall climate and the emphasis on enforcement, I would say, at the time, what people should understand about the no action process and no action letters in general is, number one, they're very narrowly tailored, right? Even though people rely on no action letters in practice for other projects and other circumstances, it really is, as we've been saying, facts and circumstances tests.
Sure.
Very, very specific to the facts. So just because, hypothetically, and this is just about no action letters generally, just because Project X did something and got a no action letter, it doesn't mean that one can follow that no action letter for precedential value unless you have all of the exact facts, right? Or at least all of the same material facts.
Sure.
So that's an important thing. Also, that letter is not, it's not forward-looking insofar as it doesn't protect a project or a company or, whatever entity or person received the no action letter to do anything that they want in the future, they have to do literally what has been described to the SEC in the incoming letter. Okay?
Yeah.
So you can't change paths and then think, oh, I'm introducing this new function, this new thing, and I'm still going to rely on this original relief. And then beyond that, what the no action letters say, essentially, I'm paraphrasing here, is that in reliance upon the opinion of counsel, which is the incoming letter written by the lawyer, okay? So there you are, as Angie said, relying on the opinion of a lawyer, not the opinion of the SEC. If you do the following, which you put in your letter, and then they'll call out some highlights, we will not recommend enforcement against you for violation of X, Y, or Z. So it's not saying this is perfectly amazing. It's saying if you adhere to this, we will not recommend enforcement. So I think that that's very important. I would say, again, we can understand why people might want to hear the great voice on high of the SEC saying that something is a certain way. But one of the criticisms is, oh, well, without a no action letter, how do you know the next day, you could have a different result, because there's this idea that something could be a security, it could not be a security, it could be a security under the framework, the SEC's framework for investment contract analysis of digital assets. But in my personal view, I don't believe that the light's going to hit a digital asset that is not a security, and somehow it's going to start looking like it's changed into a security or it's changed back into a security, if it ever was. I think you need to have some sort of activity or function to use
just going to, we take the words out of each other's mouths a lot, but I was just going to quote Val again. Function and activity.
That looks like a security. So if you create a new investment contract, okay, then maybe you've created a new security. If you suddenly have a yield coming off of it or other rights that make it look like stock or a bond or something like that, then maybe then you have a security. But I don't think it's as wishy-washy as people think.
I would say the function of the DOT token at a base layer probably will not change.
Okay.
There will be applications built on top of Polkadot, and there will be various, iterations of applications. But I would think that the core purpose of DOT will remain, and that to me says that it's not going to shift back to. I would bet, and this is just my personal opinion, that it won't shift back to being a security.
Okay.
Yeah. So I think that it's really important, as Josh said, to think about how these no action letters are written, and they're written by a lawyer, which would be Josh. Josh has never issued a legal opinion saying that a token is not a security.
Right.
That's really important. I run a securities broker dealer and have had licenses for 20 years. I don't want to mess them up now.
Right.
Right. Yeah. And so for us to come out and say this isn't a security, this is software, we're doing that based on 3 years of work and 3 years of learning and understanding the white paper and all of the various aspects of it. I mean, the list that we had, the checklist that was in the white paper that we had was really, really long. I mean, pages long. And, that's another reason why it took a long time is that the developers creating the Polkadot network had to satisfy all of the various aspects of the white paper.
Right.
And then, at the end of that process, we got really comfortable after having received the feedback from the SEC. And, we kind of got to a point where the conversation, had kind of come full circle. But that doesn't mean we're not still engaging with them actively. Of course. And it doesn't mean that we wouldn't love to have a no action letter. That'd be great. But, yeah. But it's just that, in terms of the substance, we've already done the work.
One other just thing that I think might be worth saying, because there has been a lot of talk about, many believe that digital assets themselves, unless they have characteristics inherent in the digital asset or that have been ascribed to the digital asset that make them look like some sort of enumerated security, such as stock or a bond or something like that, that otherwise a digital asset that is sold pursuant to an investment contract, that digital asset itself should not be a security. What I would say is we're not fighting against that.
Right.
If people can persuade a court that is the way forward and that is what the law properly is, great. I think it's not intended to be antagonistic or, adversarial.
Mm-hmm.
In our view, DOT is not a security. And whether it's not a security because a court may say it never was, right, someday,
Mm-hmm.
or because it went through a process not to be a security, I think we landed the same result. And similarly, while some people may balk at, the quote that we've been saying from Valerie Stepanek about, stopping thinking about digital assets as their own asset class, right? There are opportunities to change laws,
Sure.
right? So, we are not in any way dissuading people from pursuing changes to the law, right? I think it's just, to me, and I think to you, important to say that whatever has been done in this instance, it's because we knew what the view of the regulator, meaning the SEC, was likely to be, and to comply.
If anything, we went with the lowest friction option. I mean, going to your Congress people, changing the laws, Congress changing laws.
Holy,
That's a big process.
Yeah, right.
Versus starting with the framework that already exists
Yep.
and saying and asking, does this fit?
Yeah,
And can we work with this?
right.
We wanted to deliver the Polkadot network.
So in the beginning, DOT was a security.
Yeah.
That's right. And what we did is we did this, well, you all did this process called morphing. When did we decide that we would morph? Was there a time when we thought we could make it work as a security? Or was morphing kind of always on the mind from the beginning of the engagement with the SEC?
Taking it way back, I think, with the writing of the white paper, I don't think it was envisioned back then that the digital asset was going to be a security, right? That
Right.
DOT would be a security.
Right.
Okay.
So I think in that way, yes, of course, we wanted to get to the idea that current day offers and sales of DOT would not be sales of a security.
Yeah.
Right. So for that, we looked at what was out there, right? We had heard, all of us throughout the industry, the speech by Director Hinman, right, which was followed up by the April 2019 framework that I mentioned before, that talks about, all the ways in which digital assets may be securities, right? It has a whole bunch of different factors, many, many factors, all of which look like they're pointing to initial sales of digital assets for fundraising, looking like they were sales of securities. But they also had 9 factors in there where it said, a digital asset initially offered and sold as a security may no longer be a security at a later point, or it may be worthy of being reassessed.
Right.
Right. And so I think that's what we focused on. But as to whether DOT could have worked as a security, I think it was working as a security, right? In the view that we embraced with the SEC, initially, DOT was delivered as a security just as it was sold as a security.
It's a good path to go down to just look into what can I, how far can I get just with basic communications, basic disclosures,
Sure.
basic investor protections. People should want to do that anyway.
Yeah.
And so, there's a lot of progress you can make in terms of decentralization. The morphing process itself, I always think of it as the network morphing from a few people or a
Right.
few entities
Right.
who control the network to many, 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 many entities that control the network and people that control the network through governance
Right.
and through a validator process that, like we have at Polkadot, where decentralization is built in to the design of validation in Polkadot, which I think is also important. The treasury is decentralized.
Yeah.
And having a decentralized funding mechanism was something that I think, in terms of the education, as Josh said, one of the reasons the SEC did ask people to come in and talk to them is because they wanted to learn.
Right.
And the Polkadot treasury mechanism, I think, was really interesting to them because we haven't seen that before. This should be decentralized. The community should direct everything, really.
Right. And then that's multiple parties contributing to the value of the network too, right? That's a piece of it.
Right. I think that also back then, one of the distinguishing factors that we noticed was that when we were doing a lot of comparisons to Telegram at the time, the average purchase in the Telegram offering was something like $10 million compared to, per purchase.
Sure, yeah.
Compared to Dot, which was around $2,400.
Huh.
And that we equated to the CapEx that you might spend as a builder to create an application. Rob Papermeyer and all the developers all over the world, it was their intention to deliver a decentralized network. But that was just one indication that this actually, that the groundwork is being laid for this to truly be a decentralized network. If a lot more people are spending a smaller amount of money, it indicates true building.
Right.
Versus investment for a quick return.
Absolutely.
And there's a case that we don't often talk about, and I won't talk about it now, but it's called Foreman, and it goes to the question of consumptive use, right? And so I think part of what Angie's getting at is that one of the things that was brought up in the Telegram case was this idea. Look, the court said something like there are going to be millions of new users a month, but guess what? When they sold to the initial purchasers, they didn't sell to that many purchasers. The whole idea was that they would flip it, right? They would sell on, like underwriters, right? Whereas in the case of Polkadot and of the purchases that Andy was mentioning, it does look like consumptive use. And I would say some of that was intentional because diligence was done, right? And certain folks were turned away who wanted to purchase very large amounts because that didn't seem reflective of an intent to consumptively use. So I think that's important. We're talking a lot about decentralization and the ethos and the importance. And yes, there is an importance for that for purposes of fairness and all kinds of other reasons. But how does that tie to the SEC? And how does that tie to investment contracts? And what we were talking about delivering parachains and things like that. How does that all come together? Well, the Howey test, which I'm sure you've heard of, and probably people are tired of hearing of at this point, which is an over 70-year-old test. It originally involved orange groves. It basically was used to define by the Supreme Court the meaning of this mysterious term investment contract that appears in the Securities Act and the Securities Exchange Act as a definition, in the definition of what is a security, right? So investment contract isn't defined. But what Howey, that case, SEC versus W.J. Howey, it set forth the Howey test. It's a 4-part test. You have to satisfy all 4. I'll just go through it really quickly. It asks whether there's been an investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others. So did you give money or take in money for fundraising, with the intent to build out a blockchain or something else,
sure,
and other parties are building it.
Yeah.
So this looks a lot like ICOs, right? And so when we talk about efforts of others, relying on the efforts of others, that's where we get to the decentralization.
Right.
As we have greater and greater decentralization, I think this is apparent when you look at the framework, you're getting away from this idea of some identifiable others who initially made these offers,
right,
sales, right? Instead, you're relying on a dispersed group, right? Not an active participant, which is the term that's used in the framework by the SEC. So that's point 1. Decentralization, I can't speak for the SEC, and I won't speak for the SEC, but I'll say I don't think under the securities laws there's something positive or good about being decentralized.
Okay.
It's literally, how does this apply back to the existing rules? And so to the extent you have greater decentralization, it looks less like you're depending upon the efforts of a defined group.
Right.
I think the other part, which talks also about what is this mysterious morphing? Why would you even do this?
Yeah.
And why delivery of of things like parachains were important is, okay, so if you go back to the idea of an investment contract and you have a white paper that's making promises, okay, staying away from fraud, right? No one wants to do fraud. don't commit fraud. Fraud is bad. But
this is legal advice.
Exactly. It's legal advice. Don't commit fraud. But if you're trying to say, and I think part of what the SEC staff has communicated, or some believe it's communicated, is that the token itself is embodying, at least for a time being, the investment contract. Well, guess what? If you look at the initial offer and what was promised in the white paper, what better way to say that the investment contract has gone away than to deliver what you said? So
there
to
you go,
me,
yeah.
even though it might sound like hocus pocus, 1 minute you have an investment contract, 1 minute you morphed.
Yeah.
In addition to building out the processes that Angie's talked about communications, also delivering what you promised.
Amazing. So I feel like people outside the Polkadot community are still grappling with this, maybe actively resisting it. But then there are people inside the Polkadot community who are very nervous about doing what we've said is unlikely, but it's flipping back into something that looks like a security. I just want to run by some of the wildest theories I've heard.
Okay.
One is on this idea of a state, a DEX on statement and state mine, the common good chains, and using treasury funds as liquidity. People are worried that that could flip us back. How does that strike you too?
As long as we're not creating investment contracts out of the native dot token, I don't see a flip. So I'll reserve judgment on that because I don't know all the details of that. Of course,
yeah.
I've spoken to a couple of developers who've gone through, various iterations of thoughts on that. I think people are being very thoughtful to make sure that when whatever does rolls out, it's been vetted.
Yeah. They're thinking about it.
They're thinking about the idea that we don't want this to flip back.
Right.
And if we offer investment contracts, it would flip back potentially. So, yeah, I think people are thinking about that. But again, I'm not a developer. I depend on people like Joe Petrowski, who I think is absolutely brilliant, and Bill and the whole Rob and everybody. So,
gotcha.
What I would say is exactly as Angie said, it's facts and circumstances, and I don't know all the facts and I don't know all the circumstances. But I also think we should be careful about the terminology that we use and relying on terminology in general. And not
that's a very good point.
On the, whatever, as the SEC would say, the economic realities, right? So holding aside the question of a potential DEX or something like that, we may call something liquidity. Is it liquidity or could it be a return? Or... just like when people are using the same term staking for staking and staking, right?
Right.
I think
when they really mean lending.
Yes, exactly. Yeah. We really have to look at each step of the way, what's being done, and does this look like something that provides an investment contract, for example, or that looks like some other kind of security. So I think, unfortunately, we have a lot of terminology, in our space that can be helpful, but it also lumps together whole bunches of things. For example, if I just talk about, the term stablecoin, right? We know that can mean things that are fully fiat backed.
Yeah.
We know that can mean an algorithm that doesn't work, So using the same term is not necessarily helpful for solving the question. I think a lot of times it comes down to, and I think this is very important for lawyers in the space and also for founders and others who work with lawyers, but also, and other professionals, explain, ask, because you really need to understand the funds flow of things. That's really important. And how each component is working, because just relying on terminology, the terminology may sound innocent and you may inadvertently talk around the reality.
Fantastic.
So many of these instances over the last 3 years where Josh and I get together and we talk through the various ideas that are being proposed. And, I think the greatest thing about the Polkadot developer community is they're so creative and so brilliant, and they want to do the right thing. And so I think whatever ends up being the product that you're talking about, I'm highly confident based on past experience that we'll get there.
Yeah, gotcha.
Yeah.
And even if we're confident not calling ourselves a security, there's still a lot of retail investors who see DOT as an investment. Could the Treasury pay an influencer to hype up DOT as like a hype coin, and could that ever put us in jeopardy?
Yeah, so marketing the DOT token
Yeah.
is not, I mean, that's not investor protection, right?
Right.
That's kind of the opposite of investor protection.
Right.
And so we've really tried to really to avoid that. I mean,
Yeah.
we really don't, this idea that, $DOT is something we talk about is really, it's what I always say is, Dan Schulman, the CEO of PayPal, is not out mentioning PYPL in passing. He's
Okay.
not, and
Wow,
PYPL
yeah.
is not out in advertisements. Now, PayPal branding is okay.
Right, but the cash tag.
Yeah, but I
Yeah.
mean that,
Interesting.
it's like, let's start talking about what Polkadot does. I'm so excited
Yeah.
about the fact that there are, so many developers, 1,000 developers building on Polkadot, or over 1,000 developers building on Polkadot, and all of the really cool. And that was just, we looked at the numbers we looked at, the Electric Capital report, and combined Polkadot and Kusama
Mhm.
because, well, of course, Polkadot and Kusama together are number 2 behind Ethereum in terms of number of developers. But it was exciting that in the top 10, Polkadot was one of the top 10, Kusama was the other of the top 10.
That's wild.
And that didn't include Moonbeam, Aster,
Yes.
and
right.
then all these other chains. I mean, I have been, Sally Liu, our analyst who covers Polkadot, and I are going to be working with Electric Capital. I'm very excited about this. I haven't even told you about this, to track all the parachains, because one of the parachains, BitGreen, I was talking about. I hope it's okay that I called it out
Yeah,
here on
sure.
the podcast, but super interesting use case. And he said to me, Adam said to me, when that count was taken, we had one developer. Now it was actually the end of January, we have 9. So I'm just excited about all of the development activity going on, because one of our key mantras, which, Kathy Wood at ARC has said this for many, many years too, is follow the developers.
Right.
That's important.
No doubt.
Yeah.
Good stuff. Well, it's been a really great talk. Thank you so much. I think I learned loads, and I'm sure our audience learned a lot as well. Just to close us off here, what are you each looking forward to in the Polkadot ecosystem? I don't know, Angie, if there's any game chains or anything that you're particularly interested in?
Yes.
Yeah?
I am.
Okay.
Can't talk about them now.
You can't talk about them now. Okay. But
I'm very excited about gaming coming to Polkadot, and we're going to be at ETH Denver.
Cool.
We're going to be having an investor brainstorm with investors and game developers,
Yeah.
Web3 game developers who are also integrating AI, which is really cool.
Yeah.
Some of them are building on Substrate, others are building on Polkadot, many others are building on Ethereum. And the fact is at this point in the evolution of games and Web3, all of these are building EVM compatible solutions.
Right.
And so from my perspective, I hate to, I'm probably going to sound very kumbaya about this, but I think Polkadot is an accelerator for Ethereum and a lot of other chains.
Absolutely.
Because by definition, if we're talking about interoperability here, and, Polkadot enables interoperability,
Yep.
then the number of transactions that can occur on all these other chains,
Sure.
the math is the math. I mean, this is, I think, an accelerator for Ethereum. So I'm really excited for ETH Denver, because there's so many great games that are being built up. We have Playconomy coming, which is a show. It's a show on YouTube. They stream Web3 games with the founders and actually play the games.
Cool.
And so it's play testing, streaming, influencer commentating. Rebecca Kaida and DJ Wright are going to be there, and Ryan Day. They're going to be playing the games, streaming the games. We're going to have a lot of great content there. And then the investor brainstorm will be, the 5 burning questions investors have about Web3 gaming. And so stay tuned.
Okay, sounds amazing. Josh, what are you looking at?
A lot.
Okay.
Right? Like I
Hit
would
us.
say, it's never a dull moment in the digital asset space, especially with regulators being really on an enforcement bandwagon right now. But what I would say I'm excited about, going back to Polkadot for a second, because there's
Sure.
lots of things, including what Angie mentioned, that I'm really fascinated about, including video games and all kinds of other use cases as well. But I think one of the things, and I've mentioned this previously, is I really believe in a multi-chain world, right? And that's why I'm excited to work, for example, with the folks, the developers and others at Polkadot. I'm excited because the whole reason of being is to have interoperability, right? It isn't just something where, we're just maxis for Polkadot and the rest of the world goes away. We need the rest of the world. This is supposed to be infrastructure. So I'm really excited about seeing how folks choose to build on Polkadot and how the hard work that the Web3 Foundation and Angie and others have done to try to make a stable as can be, right? All caveats apply, not legal advice, but a stable base, right? That projects can feel comfortable building upon. I'm really excited to see everything that proliferates. And I'm also excited as a lawyer about helping projects, figure out how they will find their paths to compliance. Right. Because I do think it's important, just as we have, the infrastructure, the base, all of the parachains and other layer ones out there and so on and so forth, they also have to grapple with the same laws and compliance requirements.
I love it. I said it in the space, and I'll say it again. What you guys are doing is amazing. It is so...
what you're doing is amazing.
Exactly.
Shut up. Shut up.
Society.
That Friday show? How do you do that? How do you do that?
Come on. The courage to go into the SEC and to redefine this entire space, not only for Polkadot, but for any blockchain project that wants to come and follow in their footsteps, is amazing.
It took a lot of courage from the founders of Polkadot and the Web3 Foundation.
That's fair to say too, no doubt. A lot of people are all working together to build this out. And I just want to thank you so much again for coming into the show and sharing this story with our audience. I hope later down the road we can catch up again. But for now, thanks very much for coming on Space Monkeys.
Thank you for having us.